Hello guys, today we'll talk about is there any stock that we can invest in that yields a dividend that is better for us, better than us buying a house to rent it out. So this is the stock Verizon. So probably you have heard of Verizon, this company. So recently the stock price is not doing as good and they have been launching some products that have been not too successful. So there's a strategy behind on when and what and how we should invest in it. So right now I'm sitting on a beanbag. Yeah. Inside a recording room studio as I always do. So this is why we will talk about the Verizon today. So right now we look at the stock price. So this is the Dow Dows of this year. So usually the percentage of investing in Dows of Dows is pretty high, right? But for this year the stocks are almost all underperforming the Dow Jones Index. So this is one of them. So Verizon is one of them. So recently it has been rebounded quite a bit but for this year it's like plateauing, ups and downs. It's not doing as good. So let's break down what kind of company is that and what is there any valuation and technically strategically when should we buy, at what price we invest in to get the best and get the most out of it. So first of all, Verizon is one of the biggest companies that provide wireless services to around the world. So that has been around 70% of their revenue. So right now, as you can see, using Bloomberg, the past reported growth has been pretty much plateau, right? So this is exactly why they're giving out high dividend. So the growth has been fluctuating from $2 to 2.1, 2.1, 2.8, and recently the last year has dropped. And the most recent when people are predicting they're earning $3.764 per share. The report will be announced in January 23rd. So it is only growing for only a little bit. So that's why the price is not moving that much. That is exactly why. But that is also why, because of the market share is really big. They are getting the really big chunk of the market share. So they will be really generous in giving out the dividend to the shareholders. So you will not expecting the price to go up to giving you a return in terms of investment. But if you are investing one of the shareholders for this company, they will for sure giving you back for $1 billion, $100 billion, giving out 30 to 40 or maybe 50% of the dollar as a payout as dividend to all of us. So right now it's famous for having the dividend increase for consecutively 30 years. 30 years, that is what they're doing. So the most recent year, the dividend yield is dropped by a little bit, but it has a really, really strong and good dividend policy for all of us. So think of that. If we are not aiming, we're expecting the price to go up and down between $43 to $55 per share. That's okay because you're getting almost 5 to 6% dividend yield every year. Imagine if you buy a house and rent it out, if you're in Canada, Hong Kong or Australia, you're only getting 3% max from a house. If you're getting apartment, yes, 4%, but excluding you have many things to fix, maybe the sewage is broken, the toilet is broken, stuff like that, you still have to spend time to fix it. But you buying this, it's giving you a solid 5%. For this year, people are expecting they're giving out 5.5% dividend yield, and this is really stable, and they're raising the dividend every single year for 30 years. That is a really good deal. But of course, if you buy a house, the house will grow, right? That's another strategy. But this price, the stock price of this may not grow too much, but you're getting a solid 5 to 6% for a really, really long time. So that's really one of the really good advantage that we should consider putting and investing into our portfolio. So right now, technically, it's $49 per share. So when should we buy it? So we have to look at the product they're launching is pretty bad. This watch they have, after going out to the market for 4 months, they've been stop the production already. So right now there's some marketing strategies. For example, buying Pixel 2, the Google phone, they're giving you 50% cashback, which many service providers are doing the same marketing strategy, right? But let's say if they're working or not. But if they don't have new business, right? Let's say the wireless service will be really stable. People will not canceling their account all of a sudden unless they're providing bad and stupid service to everyone. So they will migrate to another service provider. Other than that, Verizon will be having a really stable market. So let me focus it again. You're not going to invest in this stock aiming and expecting the price to go up to $100. If that's the case, you should invest in Amazon, Facebook, Google, Home Depot, what I've been telling you guys to invest in. But you're expecting the pie of the share will be exactly the same. But in general, the population of using wireless will be growing for a little bit as the population growth, maybe 3% to 2% or 4%, right? But they will giving you back a big chunk of dividend as a shareholder. Then you should invest in it. So it is really a protective strategy for you. Maybe you're doing a lot of risk in investing, so you can blend in this stock to lower your beta and lower your risk, so you have a more diversified and more stable portfolio. That's exactly what I'm trying to say now. So technically, I think technically there are two prices. So technically, if it goes down to $47.50, that's upper channel, after channel 9, you can try. If the stock price will rebound, it's really good price to buy. If you use the discounted dividend model, then the stock price, imagine you are getting the dividend forever and discounted back to today. So the stock price will be, the fair value will be $45.9 per share. So anywhere around $46 to $47.5 is really a good deal to make, and then you're expecting to get a really stable dividend from now on. So if you have any question, please leave me questions in the comment section below, and please give me thumbs up and share this video to your friends. And this is really a really simple strategy, as especially for those if you're beginners or if your friends are beginners. So tell them that investing is really easy. If you make it difficult, you'll be really tempted to do speculations and margins and leverage. That's really bad. You will for sure most likely pay a really good lesson and before you learn something about investment, because investment and speculation are two different, really completely different approach. So we'll make investing easy. So see you next time. Goodbye.